If almost all of your trades keep hitting stop loss, this video is for you. I'm going to show you the simplest way to consistently identify high probability trades. And you can trust what I'm going to show you because this concept is what helped me to increase my win rate, become profitable, and scale to multiple six figures in funding. So in this video, I'm going to teach you how to read market structure in a way that's going to help you to identify with high accuracy where price is likely to move to next. And whether you're new to trading or have been trading for a while, what I'm going to show you is simple to learn and is going to help you to stop taking loss after loss. So let's get into it. How to identify high quality trades. So first of all, there's a problem. It's normal to take losses, but if you're consistently taking 15, 20 losses in a row, there is a problem. The reason your trades keep losing is because you're unaware of where price is likely to move to next. So that brings me to the question of, but how do you identify where price is likely to go next? There's one simple thing you must understand. So no matter what time frame you're trading, whether it's the daily or the 1 minute, price can become overextended. Understanding whether price is overextended or not on the chart you're trading is how you're going to identify where price is likely to move to next, helping you to identify high probability trades. So whether the trend is bullish or bearish, it doesn't actually matter. If price is overextended, this indicates that price is very likely to create a pullback before continuing in the trend's direction. Before we go on, I actually used this concept to identify a trade that made me $1,167 on one of my live 100K funded accounts. And I put together a free video breaking down the strategy behind it and the process I followed to identify this trade, which you can learn and use to implement into the markets for yourself. So if you're interested, check out the link in the description to watch the free video. So on your screen, you can see a visual example, some chart work of price becoming overextended to help you understand exactly what these concepts are. So price has created a new higher high, as you can see marked there with the HH, and has become overextended. This is the 4-hour time frame on gold. And again, it doesn't matter what time frame you're trading or what asset you're trading. So because price has become overextended, there is a high probability that price is likely to create a pullback. So we can see there with the arrow, we have a push phase. And then with the second arrow at the top there by the higher high, we have a pullback phase. Price has pushed up, become overextended, and is now very likely to create a pullback. So we would not want to be buying when price is this overextended to the upside. Instead, we can wait for price to pull back and then continue to buy. So prices continue to push in the upside or to the upside, creating new higher highs. Price pulls back, which you can see labeled there with a HL, a higher low. So it pulls back to the downside because price was overextended and then continues to push to the upside. Here's a sell side example. So price has created a new lower low marked there with the LL. So you can see with the arrow push phase and then the pullback phase. Price has created a new lower low and has become overextended to the downside. Price has pushed too far to the downside. Price doesn't go up forever and price doesn't push down forever. Eventually price is going to become, as I'm teaching here, overextended. And so there is a high probability that price is likely to create a pullback after becoming overextended. And in this example, after pushing to the downside and becoming overextended to the downside. So there is a high probability, as I've said, that price is going to pull back after pushing to the downside. So we would not want to be selling when price is this overextended to the downside. Instead, just like the buy side example, we can wait for price to pull back and then continue to sell, following the overall trend. So as you can see here on the chart example, price continued to push to the downside, creating a new lower low. And then from that lower low, with the arrow, we have a pullback phase. Price pulls back after being overextended. Okay, pulls back and then continues trading in the original trend's direction. You may now be thinking, how will this actually help you? Okay, and why is it important to identify if price is overextended? So utilizing this concept, as mentioned before, no matter what time frame you are trading, price can become overextended and is then highly likely to create some form of pullback, which I've just gone through in those chart examples. And so by knowing if price is overextended, you'll be able to identify if price is likely to create a pullback, which will allow you to position yourself in the market correctly and avoid getting stopped out during a pullback phase. And that's how you're going to utilize these concepts, the concept of price being overextended, to position yourself correctly in the market and to avoid getting stopped out in pullbacks. Because you might be on the right side of the market, you might have identified the trend, bullish or bearish, but because price is overextended, if you try and buy or sell, you're going to get stopped out and then price is going to continue. And that's why understanding whether price is overextended or not is going to help you to identify high probability trades. To help you understand further, here's that buy side example. Again, you can see illustrated with the push phase, the first arrow pushing up, price pushes to the upside following the bullish trend on this time frame. Price becomes overextended, eventually creates that pullback. Where we see price pullback, at the end of the pullback is where we're going to be looking to take our buy opportunities. Because price has become overextended, there's a very high probability that price is going to want to create a pullback. It's simple market structure. Price moves in a push and pullback fashion. And again, with the sell side example, we can see marked with the arrow, price pushes to the downside aggressively, creates that new lower low, and then eventually, because price is overextended, price is very likely to create a pullback. Once we see that pullback finish, this is where we're going to be identifying high probability trades to then sell following the original trend. So once price has pulled back from being overextended, as I just went through there again in those examples, assuming market structure is in a trend, price is then likely to create a new push phase in the trend's direction. So going back to that sell side example, we can see that price push phase pushes down, creates that new lower low, becomes overextended. We then see a pullback marked by the arrow, and then where we see that new lower high marked by the text box here, price pulls back after being overextended to the downside and then continues trading. This is where price is likely to create a new push phase. And this is where we're going to be looking to identify high probability trades. This is where you're going to find the highest quality setups, trading that new push phase. This new push phase, so the end of the pullback, is where, as I've just said, you're going to find the highest quality trading opportunities that the markets can offer you. And again, this is assuming that the time frame, the asset you are trading, is trending. Here's another example, a visual example, a chart to help you understand this concept even further. This is on Euro USD on the 4-hour time frame, but again, it doesn't matter what time frame you're trading, these concepts are fractal. So we can see there, price creates a push phase marked by that arrow to the upside. We see a new higher high marked with HH. And then what we see is price create a pullback. Once price finishes pulling back after becoming overextended, so price has become overextended, once we create that new higher high, it can't go any further. It needs to create some form of pullback because that's how market structure works. Push, pullback. And so this is where you're going to find the highest quality trades. So just look at this chart example. You see that push phase to the upside. Price creates a pullback, which can take some time depending on what time frame you are on. And then where we see price create that new higher low marked with the HL, we then get that new push phase marked by that arrow there pointing to the upside on the far right. This area where price has finished the pullback and going to potentially create a new push phase, this is where you're going to find the highest probability trading opportunities. Here's an example on the sell side. Price creates a lower high, pushes to the downside as marked by the arrow. We then create a new lower low. This is where price has become overextended. It's very likely for price to then create a pullback. We're going to wait for that pullback to happen, marked by the arrow saying pullback phase. Once price has pulled back, we're then looking to trade the continuation. We're looking for price to create a new push phase to the downside in this example. So price finishes pulling back after being overextended. This is where you are going to find the highest quality trades after price has created that pullback. We're looking to trade that continuation of the new push phase. We're anticipating price or market structure to create a new push phase to the downside in this example. So lesson summary, just to wrap up everything that we went through today. So to know where price is likely to move to next on any time frame, again, these concepts are fractal, you've got to identify where price is. So whether price is overextended or not. If price is overextended, then market structure is likely to create a pullback. Once the pullback is finished, The new push phase of market structure is where you will identify the highest probability trading opportunities. The new push phase will offer some of the highest probability trading setups. I hope this video has helped, and I'll see you in the next one.